Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajshekar Kungari, Equity Research Analyst, part of Marcus Smith India team, which manages model portfolios. Before we go ahead into the podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISL in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Here is the Nifty's daily chart taken from our website. As you all aware, that Nifty is currently trading near all-time highs, which is a very positive sign for the investors. Broader market indices, Nifty mid cap and small caps are also trading near their all-time highs, showing broad-based strength in the market. And also all key sectoral indices are also trading above their moving averages, which is a very positive sign. The unwilling rally is broad-based, which is a very good sign. And if you look at the Nifty, last 1 week prior to this, we had seen Nifty uh, coming down slightly and reclaiming, or I can say retracing its 21 DMA, but it found very good support at its 21 DMA, which is a green line. So going forward, this green line is going to be a very crucial level for the index. After the 21 DMA breach, 50 DMA is going to be a very good support for the markets. Historically, it has been the case that 50 DMA acting as a very good support for the markets. So 50 DMA is going to be a very crucial level, and we'll be keenly tracking 50 DMA to change the market status from confirmed uptrend to under pressure. Currently, the distribution day count is at 3. We had seen one distribution day expiring recently, and also one distribution day being added. So currently on net basis, the current distribution day count is at 3. If there is any further accumulation of distribution days, a couple of additions from here, and Nifty breaching key moving average indicates some kind of selling happening in the markets. That is when we change the market status to under pressure. And coming to the model portfolio, we already have adequate number of stocks in the portfolio, and we have been looking out for stocks which are coming out of their base patterns and looking good on cash flow parameters and adding them to model portfolio. Within the existing portfolio stocks, if there is any stock which is moving sideways or which is underperforming, we'll try to exit that stock from the portfolio and make room for the new stocks. Some of the companies which are in the news and which will be under radar today, one of the major jewelry company has also PN Gadgil Jewelers is going to list on the exchanges today. So the grey market is suggesting a premium of 64% over the issue price. This is a very signaling a very strong debut on the markets. Recently, we have seen Bajaj Housing Finance as well listing at more than 100% premium on the issue price. So going forward, the IPO segment is very strong in the market. Investors are looking out or subscribing for IPOs, looking at these oversubscription and also strong listing gains. However, if you are not getting any allotment, mostly it is on the lottery basis. So please be don't worry. There will always be time for the in the any stock to take a fresh entry. Let's wait for the stock to form IPO base and can take a call on the breakout. You can browse through our learning articles to know more about how to track or how to trade in the IPO stocks. Next is SpiceJet has approved a qualified institutional placement of shares around and at a floor price of 64.8 rupees per share. The majority of the proceeds will be used to reduce the debt liability of the company. Reliance Infrastructure companies also, the board is going to meet day after tomorrow, that is on Thursday, to consider raising funds for the company. Mostly it will be through a preferential issue of shares. Sundur Manganese and Iron Ores, the board is going to raise a proposal of around 1,000 crores of issue of equity shares through QIP, that is qualified institutional placement. Coming to the institutional activity yesterday, domestic institutional investors were net buyers in the market. They have bought more than 750 crores of Indian equities, whereas FIIs have sold more than 1,600 crores of Indian equities. Overnight, US market closed on the muted basis. You can say Dow Jones with a gain of 0.5%, whereas Nasdaq closed with a decline of 0.5%. S&P closed flat with a gain of 0.1%. Asian markets, Kospi and Shanghai are still in the trading holidays, whereas Nikkei is trading today and it is trading with a huge decline of more than 2%. So on the Asia markets front, we have negative cues, whereas on the US market, there are no major cues from the markets. Let's look at to GIFT Nifty, what it is suggesting for the Indian markets. It is trading at 25,400 levels, which is the level which Nifty closed at 25,380 level. So not a major gap up. We might see a positive opening, but on the overall percentage wise, if you look at it, it is a very minimal gap, minimal gain. So you can consider it as a muted opening. And also global cues are mixed. We can say we might see a muted action in the Indian markets as well. Otherwise, if there is any major action happening in the heavyweight stocks or large cap stocks, we might see a huge action. Otherwise, we might be looking at a muted action on the Nifty's front. For chart of the day, we picked D-Link India, which has been added into our buy watch list as well. Currently, it is trading or extended from the ideal buy range from the but what we like is a base formation, which is a very good because of its declining in volumes, indicating not much action in the stock among institutional investors. Uh, When it broke out on higher volumes, signaling a strong breakout. Prior base breakout was successful and it consolidated for a period and it formed a complete handle. So overall, it is a very strong base in terms of price action and volume action. And if you look at the ratings, most of the ratings are very good. You can say EPS is at 88 and RS is at 89, almost at 90. RS line has also formed blue dots, signaling a strong outperformance of the stock. Even though the magnitude of funds is on the lower side, but it picked up in the recent quarter, again signaling that the stock has been an attraction among the institutional investors. So overall, on calcium parameters, it is looking very good. Our only concern is it is extended from the pivot. If it gives or retraces back towards its ideal buy range, you can consider to add. Otherwise, you can wait and look into its price action and take it all. Thank you for joining today's pre-bill. Have a good trading session.